Hello, everybody. Hooi Ling, thank you so much. Richard Liu, not the only one coming from far away, so we appreciate you being all the way over here, coping with jet lag.
It's past midnight in Singapore.
Yeah, that's right.
So.
I'm feeling it myself since I'm based in Hong Kong. I was watching this thing the other night on Jimmy Kimmel, which was kind of hilarious and appalling at the same time, where he went out into the streets of Los Angeles and asked people to identify any country on a map and just put up a map of the world. And it was really horrifying how few people could really identify anywhere. And I think particularly in regions like Southeast Asia, where the geography is very complicated and we kind of have this vague growing awareness that in the United States we need to pay attention to China. But still perhaps Southeast Asia is quite not on our radar screen as much as it ought to be. It's a vast region, 640 million people. If this were a single economy, it'd be the third largest, most populous economy in the world. It's a GDP of about 3 billion. 260 million internet users. I've seen an estimate from Google, growing by about 124,000 additional internet users per day for the next 5 years. So that's a pretty good market, right?
Indeed.
Tell us a little bit about what it's like to be the by far and away standout company, unicorn in that market.
Now, firstly, we're truly humbled to be here, so thank you for having me on stage. It's been an incredible ride. So Grab has been in Southeast Asia for 6 years now.
Yeah.
And since then, we're now in 8 countries and 225 cities. And we serve more than 100 million folks in Southeast Asia out of 600 plus that you mentioned. It is interesting because when we first started the company 6 years ago, there was very little attention to Southeast Asia. In fact, everybody didn't believe that it was possible to build a regional company like one that we have right now, because many global players had tried, many local players had tried, and unfortunately all of them had failed. Nevertheless, thanks to the fortunate successes that we've had, there's suddenly a lot of interest in Southeast Asia.
Right.
You mentioned it's the third most populous, it's growing like crazy, and some have actually equated it to China like 10 years ago. So that's what we're investing into, and that's what we think we can bring a lot of value to.
So one thing that's very different from China with Southeast Asia is that it's a very fragmented marketplace. I mean, it's fragmented because there are many different kinds of religions, a variety of different cultures, so many different languages, and then there are just the geographical challenges that some of its largest economies are actually not sort of integrated land masses at all. They're just chains of islands and kind of archipelagos. How have you been able to grow so fast in such a complex landscape as that?
Clay clearly knows the market. So we've thankfully started from a hyper-local, localized approach. What this means is we staff all of our team with the best local talent. People who understand language, they understand the culture, they eat different food. They know in order to market anything to 2 people in different cities in the same country, you need to approach it differently. With that, it's enabled us to actually grow very quickly because we just truly understand the customers that we're serving. Secondly, we also built a technology platform that's modularized, right? So the app that you see in, let's say, Hanoi in Vietnam is going to be different than the app that you see in Ho Chi Minh City, which is also in Vietnam. And those are some of the key principles that we use to grow. But I think the most important thing to share is that when you think about Southeast Asia, don't think about it as one country like China, or don't even think of it like Europe. It's actually very, very different. You have to go in literally listening and understanding which customers that you serve, because otherwise it's not possible.
Wow. So I'm just, you and your partner, the co-founder, Anthony Tan, when you sit down and sort of map out strategy, you've got this initial complication of 10 different countries in ASEAN, the Association of Southeast Asian Nations, which ranged radically from per capita income from Burma at the low end to Singapore, which is one of the richest countries per capita in the world. And then over the top of that, you're now projecting this additional layer of complexity because you're moving into different business areas. You're going from ride hailing and transportation into a bunch of other stuff. Why don't you talk to us a little bit about how you're growing and evolving in terms of your business model.
Yeah, so a bit of context. 3 or 4 months ago, we acquired Uber's assets in Southeast Asia. And as part of that milestone, we've been able to now focus a lot more into serving the key everyday needs of Southeast Asia beyond transportation. What I mean by that, right? We're now in Grab Food, so food delivery services. We're also into payments and financial services, which is expected to be 20 times the size of transportation. And we're also in logistics. Last week, we actually announced the Grab platform strategy, which is meant to be an open platform strategy to bring as many partners as possible onto Grab's platform to serve Southeast Asia's needs faster. Because we've managed to now accumulate assets like more than 7 million drivers and agents throughout the region. Just to contextualize that's higher than the population of Singapore in total, right? Beyond that, of course, with all the eyeballs, the 100 million plus users, it is something that has never been done before. And what we want to do is work with as many partners to help grow into more areas beyond transportation. Because we think that Southeast Asia is actually behind the curve in terms of what China, India, or the States has seen via technology growth and disruption. And because of that, we have a huge opportunity to leapfrog going forward.
So you're following in China's footsteps in terms of having this giant burgeoning middle class that is really looking for new ways to consume and to kind of organize their lives on a daily basis. You mentioned Uber. This decision for Uber to exit the market and join forces with you is quite recent. It's just in March, right? And that was a really long, hard-fought battle. So how did you win? And are you still on speaking terms with Dara? And how does that work?
Actually, Dara sits on our board right now. We've had multiple conversations with him as a board member, and I have to say I truly respect the guy. We've learned a lot from him and are eager to continue working together. And I think what has enabled us to win the market is going back to a principle I mentioned earlier. Our customers are very unique.
Yeah.
How we decide to serve them is very different. So just to share what transportation for us looks like in Southeast Asia. Of course, we have taxis, we have private hire vehicles, cars. We also have motorbike taxis.
Right.
So imagine jumping into a motorbike where you're the pillion rider and you're weaving through traffic, because traffic in Southeast Asia is insane. Jakarta,
right,
the city center for Indonesia, the individuals who live there spend on average 1 to 3 hours one way getting in and out of CBD each day. If you accumulate that on average, you're like spending 22 days on average just stuck in traffic.
Yeah.
And that is the norm. So before Grab, everybody just dealt with it. But now, my favorite mode of transportation in Vietnam and Indonesia is actually jumping into our Grab bikes and just putting a helmet on and then getting there in like half the time or 1/3 the time. Just
makes all the difference in the world.
Through.
It makes. I mean, people who spend time in LA or elsewhere, I think they know what gridlock looks like. Jakarta, forget about it. It's just off the chart, a worse experience than you've ever had. And being able to cut through that with a motorcycle makes an enormous difference. But so now this is interesting when you talk about understanding the localities and being able to sort of adapt your model to each of the individual markets being important. You've used that expertise to triumph with the face-off with Uber, which was a big, serious competitor. But now people are waking up, they're realizing that Southeast Asia is a big market. This is one of the few markets where potentially we're going to have Chinese tech companies and American tech companies sort of facing off with each other. And there's been this huge wave of investment that's come in, with $5 billion just in the last 6 months in outside investment into Chinese tech companies. That's more than $3 billion all of last year, and it looks like there's other investments still in the works. So as more of these kind of sharp-elbowed, deep-pocketed foreign competitors come in, what does that mean for you? Does that create additional challenges?
So firstly, we've always lived in a hyper-competitive market. Even during the early days, there were lots of local players and global players who were trying to build taxi or Uber-like equivalents. And we've been the beneficiaries of that competition, right? My co-founder, Anthony, he has a favorite saying which just goes, iron sharpens iron, right? We've learned so much on how to better serve customers because we've seen other players doing different things that we haven't tried out. And we continue to expect it to be competitive and even more so going forward just because everybody now sees the opportunity, right? And with opportunity comes a lot of responsibilities as well. What I think we've decided to do, and it's very similar to the initial vision, is we don't believe that we need to, as a company, own and operate everything on our own.
Yeah.
We're not here to become, ultimate kings of Southeast Asia. What we're here to do is actually help our customers move forward faster in as many areas as possible for the most important everyday needs. Because of that, we want to partner with as many players as possible. Just to show an example, right, a few weeks ago, we announced Toyota had invested $1 billion in this. And why we're doing that is because they truly understand the Southeast Asia market. They can be a great partner in terms of shaping the future of mobility, and that's what we want to continue doing.
So the Toyota investment is huge, and it kind of speaks to the level of backers that you've got. It might be useful for people to just kind of run through who you've got that's funding you. I mean, to raise $10 billion in sort of 6-7 years, that's incredible, right? So you started in 2014 with Didi and SoftBank, is that right?
I don't know the exact chronology.
The exact numbers?
We've raised $5 billion to date, approximately.
Yeah.
And some of our biggest backers, of course, include SoftBank, Masasan. He joined us earlier on. Of course, Didi as well.
Right.
And now with the Uber acquisition, Uber is on our board, and Toyota. I think we've been very, very fortunate to have them, as well as a lot of other strategic and smart investors who have seen what the potential of Southeast Asia was throughout the years, right?
Yeah.
As we achieved more folks believed in us and wanted to invest in the opportunity. And I guess that's the same approach that we take, whether it's with investors or other partners. Because last week, as part of our Grab platform launch, we actually announced a partnership with Yahoo as well for content in our new app.
Yeah.
We also announced that we were going to groceries deliveries as part of the open platform strategy with a partner called Happy Fresh. And more these partners are coming on board to utilize the assets that we now have because they know they can accelerate their growth more quickly with us rather than against us.
So that's really interesting. Now, your main competitors are also partnering up with pretty sophisticated outside players. Everybody always mentions as your kind of arch rival this company that used to be called Garena and is now called Sea, has been listed publicly already. And they started out in gaming and have moved into e-commerce and are trying to become this kind of omnidirectional platform where they overlap with you in a lot of places. How formidable a competitor do you see them, and how much help do they get from Tencent and their other kind of outside backers, do you think?
So I can't speak for Garena, but what I can definitely speak about is how we've approached the market very differently. From the get-go, we knew because Southeast Asia was very cash-based, more than 90% of the economy is still done in cash. Southeast Asia is still very much an offline economy. We needed to help bridge that by becoming an O2O platform. Hence why we started with transportation, whereas other companies may have started with e-commerce or other digital goods, right? And as you think about our future evolution that I just talked about, we're still doing O2O, right? Food, logistics. Where we are making a big step forward and transitioning away from that is actually in payments and financial services. Reason for this is we realize that the cash-based economy, albeit something that we've been able to work well with, is not the most efficient, right? And we needed to help solve it because there were no alternative players who were doing it at scale. For context, up to 1.5% of the GDP of Southeast Asia is spent just transacting and printing cash and reusing it.
It's really inefficient,
it's not a good thing for them, right? And what we wanted to do from a customer perspective was make the transaction more seamless throughout a ride. And when we look at potential partners we could partner with, we realized, unfortunately, very quickly, that there was nobody who could do it at scale or speed that we wanted and needed.
You said something last night that I thought was interesting. You're trying to be every day, not everything.
Indeed.
What does that mean?
So I think look at some of the potential companies, like in China, like WeChat is very known for being a service, a platform for everything, where you can actually get massages, you can get art pieces consigned to you. That's not what we're looking for. I think thinking about what's most important to the everyday needs, the pains that Southeast Asians need to go through on a day-to-day basis because of the traffic, right? It's from moving people from A to B, as well as bringing their food from B to A, or their laptop chargers that they forgot at home from B to A at the same time, right? And of course, payments, financial services. You need it every single day.
Every day, it's a big part of your existence, yeah.
And what we're hoping to do is we want Grab to be the thing that you just need to take out from home without having to worry about your wallet, without having to worry about who's going to deliver your groceries at any point in time, things like that.
I want to take some questions from the audience. We've got a few minutes, but let me ask you one real quick while people kind of look for the mic wrangler there. So your competitors, Garena, whatever we're calling them now, they've got the backing of Tencent and they've already gone public, which triggers the question on the minds of a lot of people, are you going to bring in Tencent's arch rival, Alibaba? And are you going to go public? And if so, what should we think about that in terms of a timeline?
So I think we've been very fortunate to be able to bring in a lot of different great investors today, right? And we've been very historically opportunistic about any of these conversations. They happen with time, and when it fits, it works, we go ahead together. Now, I can't predict the future. I can't tell you exactly what's going to happen. I couldn't have told you about the Toyota deal as well. But what's really important is we continue to find partners that have the same long-term vision and plan to achieve Southeast Asia, serve Southeast Asia in a very localized way. Secondly, on the IPO front, I think, thankfully, we have been the beneficiaries of a very healthy private market. We have sufficient funding to fund our future growth platform, so no particular plans there.
I see. Questions from the floor. Cliff mentioned at the top this regulatory issue with the Singapore government. You've actually been challenged on monopoly grounds in several economies. Vietnam, I think, just weighed in the other day as well. Do you want to address that, and what's the status of discussions about whether Grab is such a monopoly in Southeast Asian markets that it needs to be in some way scaled back?
So a couple of pieces, because you talked about different dimensions, right? I think most importantly, we're definitely not the monopoly, because if you think about every single service that we've been providing to date, we're trying to help complement public transportation.
Right.
And we've been able to do that well, whether in taxis or cars or motorbikes or three-wheelers, tuk-tuks for those of you who've been to Thailand, right? And when you look at the public transportation market, that is huge, and still a lot of things there that we want and need to do to better serve the market. That's point one. Secondly, I think if you think about what's happening in the regulatory conversations that we're having right now, it's not surprising. We've just went through the biggest transaction Southeast Asia has ever seen, right? With Grab and Uber coming together. And of course, the regulators are doing their jobs. And we're part of that conversation right now, still very much ongoing. And we're looking forward to a good outcome together.
So you think that'll get sorted out?
So if you think about the history of everything that we've done at Grab with regulators in 8 different countries, multiple regulatory bodies in each country or even different cities, right? It's always an ongoing set of conversations. And they know that we want the same thing, which is to serve our customers and their citizens well, while balancing for a good, healthy, competitive and innovative market.
Yeah. Am I missing anyone over there? Tell us a little bit about, because we haven't really seen big investments from American tech companies or VCs yet in Southeast Asia, a little bit. But do you anticipate that? Do you expect there to be a lot of US involvement in the region?
I think the interest has already started, right? I can't tell you exactly how much it's going to be, when, but for sure, especially as Southeast Asia starts to become more and more well-known on the map, and hopefully more and more people can point it out on Jimmy Kimmel. But that's exactly what we think is going to happen. I think for us, what I'd like to leave you with today is for any company, whether you're from the States or Europe or China or whatnot, we're happy to have open conversations, right? Because as I mentioned earlier, we're not here to do it alone. We don't want to. We don't believe we should. And that's the approach that we've continued to have.
We've got just a few minutes left. Have we got one back there? There we go. Good.
Hi.
Great. If you can tell us your name. Yeah.
My name is Varun. I'm with Qualcomm Ventures. Quick question. You didn't speak about autonomy at all. Given that most of your competitors in the ecosystem aren't really investing in autonomous vehicles as such, what's your approach to that problem? Are you going to sit back till one of your competitors start doing something? Or would you partner with folks like Uber or Toyota who are vested in your business and rely on them to figure it out and then give you the technology?
Great.
Or would you be like the US players who are going the whole distance themselves?
It's a great question.
So, really good question, I agree. And I think this is one which completely reflects the partnership-first approach that I just talked about. So we already have active partnerships going on with companies like Baidu, Drive AI, Nutonomy, right? And we've also had, pilots in Singapore with some of these folks. Mm-hmm. So we believe that these partners will be the best path forward in figuring out how best to serve Southeast Asia. And that's what we're going to do.
Does that same thing apply to artificial intelligence? Are you trying to borrow AI expertise from your partners, your investors, or are you trying to develop your own? Because you're, as we mentioned, with all that, all that high population and all those transactions, you're sitting on a lot of data. One of the few places in the world that is a real reservoir of it.
So I think it's a combination of both, right? Already in terms of the things that you need to build dynamic pricing, right? To build smarter allocations in a very diverse ecosystem, to help smartly surface content to our users. We have a lot of internal know-how for that. So for context, we've done something everybody thought was crazy and impossible. We've built a global R&D center and operational approach for a Southeast Asian company. What do I mean by this? We have 6 R&D centers globally, one in Seattle, one in Beijing, Bangalore, Singapore, Indonesia, Vietnam. If you think about this, wow, you're like, why, right? Very simply because we have been the first tech company to truly do the kind of scale of innovation that we have in Southeast Asia. And hence, we didn't have a historic pool of talent to take from or recruit from, a la China or the States, right? And so we had to get creative on how to do it. So we took a similar localized approach to that, and we started developing global R&D centers, which has worked really well for us.
Well, you've certainly used that local advantage to great effect, and we will watch with great anticipation to see your continued growth. Hooi Ling, thank you for coming all this way to join us.
Thanks for having me. Thank you.